Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
Are you a new or sophisticated investor wanting to learn how to operate a successful syndication business? For life-changing training from the nation's leading syndication expert, my friend Vinney Chopra has the training you need. Text LEARN, L-E-A-R-N, to 474747.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Vinney Chopra. Thanks for being on the show again, Vinney.
Thank you, Whitney. Thank you. It's such a pleasure to be with you always.
Vinney's been a guest numerous times. If you have not heard of him, I would encourage you to go back and look him up. Look up even the very first show that we did was with Vinney, and then we've done numerous shows with him covering different acquisitions. A property he just closed on over a $50 million deal, and he went into details about that property and just his success of 27 syndications and just almost $300 million of assets under management. Just an amazing syndicator, amazing generous guy. Came to the U.S. with $7 in his pocket, and now look at him now. And so it just, thank you again, Vinney, for being on the show and sharing with the listeners. And so I wanted to get your opinion about the market and your opinion about what, you feel is coming, or is it coming, or is it not, or, and maybe how we can be prepared, for the syndicator side, on operator side, and as a passive investor, maybe some things we should be thinking about with quote, the market, end quote, like everybody says. And so
true.
Thanks again, Vinney.
So true. Thank you, Whitney. It's been the biggest bull, as everybody's, 2008 and it's 2019. That's like 11 years of bull in the stock market and otherwise, and economy is growing and all that. Of course, the downturn that came in 2007 and 8, it had a lot of different factors. I want our listeners to kind of keep and even do, just to Google what were the economic factors that had the downturn. In the economy, people were getting paid to buy properties. Not only they were investing, down payments, they were getting paid and so forth. So the economies are different. I think from all the readings I read a lot, I listen a lot. I think correction is coming. In 2020, they are saying middle of 2020. So that's about a year away, first of all. Secondly, I would like to say the interest rates are so low right now, and Treasury even went down even further last couple of weeks. The thing is, you got to stay in the market. I really believe in that, because those people who stay in the market are the ones who are going to know when the downturn or the upturn is coming. If you're just watching it, you won't be able to get those really great deals that might come through. But let me say also, Whitney, that, what does economy downturn means? Economic downturn is when people are losing jobs, and then maybe some of the companies, their sales will go down, and then also shrinking of the economy and all that. That's going to affect, in my thinking, engineering mind thinking, and which is what's true in 2007 and 8 was the office shrinking happened when people cannot pay their, monthly rents and things like that. They were downsizing. The companies were spending less money in hospitality, in hotels and travel. That was the other factor. When people have little less buying power, Whitney, they also shrink. They don't go to retail stores and so forth. So the retail centers were also getting hurt back then, 2007 and 8. That will probably happen. The biggest thing I want your audience to know is that as the shrinking economy or people lose homes, they need a shelter over their head. So they will be moving from single family home to B-class neighborhoods, apartments, or C-class upon their affordability. And A's in the apartment might go to B, and B might go to C, and C might go to C minus. So essentially, apartment is such a investment that doesn't get that much affected, by the way, and depending on if we bought at the right locations. That's the word I really teach a lot in my academy, is location. Everybody has heard about it, but you got to buy at the right price. Last year, I didn't buy anything. did not buy. I underwrote so many properties, but people were overbidding. I mean, they were hand over fist, and some people paid lot of money because the shrinking cash on cash, they had to give 95% to the investors, class A members of the PPM. So 95%, what can you do with 5% being a syndicator? I hate that. I mean, some of the, people did that and they gave 90% or 85%, and just for 15% of the whole thing, you're putting your life on the loan, guaranteeing the loan and managing the asset for 5 years doesn't make sense in my books, at least, So that's why I'm saying with the changing of economy, we are doing 70-30 now, right? In the heyday, I used to do 60-40. But those days are gone. Vinney is changing, which we should. My investors don't mind because they've gotten great returns from 18 to 26% average. We have done over 40% also in some deals and so on. But answer your question, I hope it was a long answer.
No, it's good. And, I know you mentioned, I appreciate, you got to stay in the market to know what's happening.
Yeah.
Right? And I know, you didn't buy anything for a year, but you're still active in the market. What are some other ways that, you're active, so you know what's happening? You mentioned, you're reading and listening to a lot. What are some of those resources that we could also read or listen to?
Oh, totally, totally. Again, the big thing is the economic reports, right? If you are going in a certain area, because that's what I find. My students also, they decide they're living in Boston or New York or all over the USA. They have a soft spot. They know some people in certain areas, in certain cities. I teach my students to go ahead on Google. Google is the best friend. Google search, say the name of the city, and then space economic news 2019, economic news 2020. Amazing, because Google is going to crawl through the space and find you all these articles. And, I love that. The other trick I like to do is the name of the city, economic report, local economic job growth report. So those keywords will give you Forbes articles and Fortune articles and local government and, some PowerPoint. I even say sometime space PPT. In other words, now Google is going to look for some PowerPoint presentations from the local leaders for that city.
Wow.
It just gives me so much information on my fingertips, and I put it in Evernote. I use Evernote. I just link it up there. When I have more time, I go through those kind of reports. I also put something very special. My students get that. We have 26, I think, markets we are watching very closely. So they are able to put it in the Dropbox, any new information that comes in. So everybody benefits with that one. So we have this Dropbox by cities, emerging markets, where we keep on dropping the positive news and all the great articles and everything. So all my students get to reach that. It syncs with their laptop. It's a very nice way to do it.
That is nice. And I can see too where, just like communicating with investors, even on current deals, that's just good information,
Yes.
that you can be providing to them as well.
Totally. The reason I've grown from 0 investor to 136 now, maybe even 142, I think they're increasing every day. But the big thing is, you're right. You got to share with them where you are going to be purchasing. See, they're not going to make that decision overnight. You cannot just say, oh, I got a deal. Would you invest in Jacksonville, Florida? You got to tell your investors and send them newsletters and digital newsletters, not physical anymore. I used to do that before, but now digital, one page with links of some great economic news so that they can get it from you every 3 weeks, every 4 weeks. That way, slowly, they're making a decision, see? That's the big thing, that yes, I feel comfortable to invest in Jacksonville, Florida, because Vinney sent me this. They won't have time. So the passive investors should really look up to your syndicators, I would say, or sponsors for some great information.
Yeah. So Vinney, with the, the market, like everybody says, we're expecting some type of downturn. How do you prepare, as an operator, as somebody that's buying, large deals, how are you prepared for this market correction?
Okay, fabulous. Like the one we are buying, that 52 million, which is bought, is the because we already had gone through the financials, and we knew we are buying at a 6.10 cap. The area called for 5.75 cap, by the way. So there is a big equity gain right there when we bought it. The big thing also is then the business plan. We knew that when the loss of lease, what the residents are paying at the current time, and what's the market potential or the rent for similar product and everything, amenities and all. Ours are even more amenities than the other people. So we have $100 in the classic units, almost $200 raise that we'll do as the leases expire. So that is the big, like $6 to $7 million increase in value of the property in next 1 year. So that's a given, because that is the loss of lease for the people, affordability, which they'll be able to still stay at the community and pay higher rents. So you got to mitigate your risks. I call it mitigation, with the downturn coming. And again, it's not going to be that huge. See, that when people think about downturn, they think about everything is going to fall apart in all over USA. That's not true. It's in pockets. It's going to hurt, and so forth like that. So you got to really look at where you're investing. Keep an eye on that market. Not to be consumed by all the negative things that is happening overall.
And it won't be every market all at once.
No, it won't not. No, not at all. I mean, like for example, Jacksonville, Orlando, like I mentioned in my last podcast with you interview, that it's like the billions of dollars are being spent. Why? Because more jobs are already coming to the Orlando area and so forth like that. I'm kind of giving up my, secrets, but that's okay. I want everybody to be successful. That's the name of the game. We are in a bigger market, pretty big market now, 300, 400 units. But my, students are in the 15, 20, 30, 100, 150 units. So it's a big pie for everybody. But the thing is, when I went there, Whitney, oh my gosh, cranes all over. That's like a dream for just like Frisco. I went there to Frisco with my attorney, Milton Colgrove, 3 years back, maybe, or 4 years back. And look what has happened north of Dallas. That was the candy to me. I mean, hotels starting, the restaurants opening every week, when the Starbucks are opening, and the big box offices are coming, all that, so something is up the sleeve, over there.
So, from being in this business and going through a cycle already, what will you do different? Say, what are you preparing differently now compared to maybe what you did through the last cycle or downturn?
Okay, very good point. We did have, by the way, we bought properties we started our business, by the way, in the market crash 2007, and a few of our properties went down, and now they've come back up, and we are selling them, So I've seen the whole cycle of 7 years it took us to go from 98% occupancy to 62% occupancy, where we couldn't give, we had returned, actually, we refinanced the loans on those two properties, and then we paid back already our investors. So they were okay with that, but we didn't give them cash flow in the downturn, Whitney, but now we sold them at the high. Like one Cornerstone Village, we just did the numbers, 40% IRR for 6 years. And that was in the downturn, by the way. It went down with the oil price going down in Midland. That's it. If anybody wants to check me out, that's Cornerstone, 120 units. We were giving $45,000 per month. Net we were raising 31% expense ratio. We were running it. Usually we count at 50%, but that property was just amazing. And then the good part was, with the downturn, we never paid any money at all, right? We could not pay that. But then investors were happy because we had nothing in the thing, right? But then now,
all right,
equity gain, we gave them back so much money. So 100,000, we gave 240,000 back. They got their 100 back plus 240. They love us,
And that was even through the downturn, right?
Yeah, through the downturn.
Yeah.
Yes.
Yeah.
That's six and a half year hold. Yeah.
And then what's different now? Like, going forward, how are you preparing differently?
Oh my gosh, I would say that we are buying definitely we are doing pressure test, we call it, right? So we are done the pressure tests of high cap rate, first of all. So with the Bentley deal that we just closed, right, that is going to be at a higher cap rate. We are already saying not lower. Some people like to lower the cap rate to make their equity gain larger so that they can average it out for the investors. Ours is the reverse case because we knew that it's going to be coming next year. So we are actually putting higher number for the cap rate so that the appreciation is not as much. Of course, in 5 years for Bentley or 4 years, market would have rebounded. It just goes down and then it starts going back up. We don't see that happening in the Orlando market, but if it does, we'll still be okay.
Yeah. And what, any kind of reserves that, like you say, okay, we're going to have this reserve bucket just in case it's worse than we expect.
Definitely. And we raised like almost 1.2 million. We were thinking about 850, but we had so many people wanting to go into it. So we just put in our PPM 20 million raise. We only needed 16. And, so we were able to raise more than, what we needed. So that was great. Yeah.
Wow. Yeah. So any other ways, or that we can see like the market changing ahead of time, Vinney, maybe some key indicators that you watch for. I know you talked about like interest rates, anything else.
I would say definitely stock market is a good indicator because stock market is always 6 months in advance. If you think that, what is happening today, it's the market movers, we call it, right? We are very small people, right? We just invest here, there. We already have heard the news, but the market movers are the ones who plan ahead. So that's where we need to be thinking about, keeping an eye, and also the economic report of the area, the Chamber of Commerce, the local government, the jobs. You got to keep an eye, and also when you see a little bit. Very good point what you just asked me. This is amazing because in Texas we are seeing in certain cities the less traffic. When there is less traffic coming to the property, when you're having some difficulty in asking the people to decide on it, and when you are thinking that, my gosh, I have to give some concessions or some specials, that is the time you got to rethink and look at it. What's happening to the approximate in the vicinity of your community? What are other people facing too? So you got to catch that a little bit quicker, right? And that's where you will be seeing that, if that is happening, you should start digging into more reports and more reports.
Yeah. Are you, do you all like secret shop other operators' properties at all? I mean, just to figure out what they're renting for or vacancy.
Totally. Every month, bud. Yes. It's called market rent study. Our community manager is supposed to do it, and it's all documented. And we keep that, archive those, every month on the month. We like to make sure. Also, there are a lot of great Inodo, other ones. What's the other one? Real Page reports. We have Co-Star reports. So they also do quite a good job in giving us all these great market comparison reports, right? So that's important. And we do secret shop. We love our community managers, other people. Many times when you're there, you already know the other managers too. So they call us, our property manager, and then most of the people, I think they fudge it. They don't want to look that bad. So that's, I've seen that happen. But I think it's good to really know what the competition is doing.
Sure.
For sure. Yeah, that makes a big difference in our advertising. Our doing apartments.com is amazing source where I think I'm told 87% of the people, when they're looking for an apartment, when they Google it, apartments.com comes first. So that's a great way to do it. Craigslist and other places, as your audience probably knows. Yeah.
So, as far as the market outlook specifically, anything else you'd like to share with the listeners, before we run out of time?
Yeah, I would say, again, you got to be cognizant of what's happening. You can't just close your eyes and say, okay, I'm going to open my eye and now, it's 2 years later and you were expecting some big downturn and it didn't happen, So I've been a very optimistic person by nature, but the thing is, you got to look at reality also. I've seen the downturns and other things, but you don't want to throw the baby with the bathwater either. I have that thinking in my mind too. You got to stay. The biggest thing I could really suggest to the investors is, remember, when the economy shrinks, if the valuation goes down, there will be some sellers who will be able to sell the property at a cheaper rate. So please look at the other side of the coin. Invest and get your investors ready, get your money ready, like my $50 million fund. I'm still holding that true, where people can invest in. When the downturn comes, I'll have money available to buy something else. So please look at it that way too. Keep on getting your money locked in. The biggest trouble I find is that people are dealing, they're doing LOIs, this and that and all that. They don't have a loan sponsor. They have not figured out who are the investors who are really going to come to the finishing table. And they spend all this money in due diligence and everything, and application fee and phase one and all. But then they cannot close because 1, 2, or 3 big investors fell out, And sometimes I've seen that horror stories, some of my students have shared with me. Yeah.
Well, unfortunately, Vinney, we're out of time, but I know you've had a few big things launched just recently, and I'd love for you to share that with the listeners so they can get their
thank you. Thank you, Whitney. Yes, I'm really excited about my 2 podcast shows that I hope you are liking them, subscribing them, giving comments. And that's Mr. Vinney's motivation talk show. As you know, I've been a motivational speaker, fundraiser, all my life. And I just have certain ways I just look at things, and I'm able to bring those nuggets every week. So please do subscribe and like that. The other show, Syndication Made Easy, my book also. I hope you have read that in Kindle edition, and the audio version is coming. And then also the paperback and the hardback. That's my journey from $7 to over $250 million. That is, again, a very simple way to understand syndication. And then, please reach me at vinneychopra.com. I'm there, my business advisors, my team, my mastermind coaching. I'm still loving it. I'm going to keep on doing it. That's on the Wednesdays that I do for my elite group, mastermind group, every week. And then my Facebook live show, which is at 10 a.m. Please join me there, Motivation and Syndication by Vinney Chopra, 10 a.m. from Pacific time. I live near San Francisco, so I do it from there.
And they can text LEARN or syndication to 474747, right?
That's right. I forgot about that one. You're right. You could just, text the word syndication. If you want to partner with me, invest with me, please text the word syndication to 474747. If you want to learn and apply for mentorship in my academy, you have to apply. Sorry, so many students, but I don't want to take your money a penny, because if you're not really committed to crushing it, and that's who I am. So please apply for mentorship, and that is LEARN. Text the word LEARN, LEARN, to 474747, or reach my business advisor, John, Jon, at vinneychopra.com. He's come full time with me. Thank you.
Vinney, thank you so much again for your time. As somebody that's been through a cycle, and had many properties, done, 27 syndications. We just appreciate, you being on the show. I appreciate the listeners being with us today and every day. I hope you will like the show. I hope you'll leave comments as well, and go to LifeBridge Capital and connect with me. I'm happy to get on a call with you as well.
I want to congratulate you, Whitney. What a great show you're putting together. Kudos to you. And I've known you for over 2 years, I think. And what a great content you bring in. And God bless you, the kind of person you are. And what a great, and part of the profits go for the, I think, organization, which you are really your wife, and you are just, so passionate about. God bless you, the whole family, really.
Thank you very much, Vinney. I appreciate that. And thank you very much. And again, the listeners, I hope you'll go to the Facebook group, the Real Estate Syndication Show, and also jump on Vinney's podcast and learn as much as you can there as well. We'll talk to each of you tomorrow.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.